Okay, welcome back to the channel, guys. Are you confused about the recent move on Bitcoin? I know a lot of people have been talking about, are we bullish again? Are we bearish? People are screaming 50K. The real underlying issue is the majority of people right now don't know what's actually happening, and the majority of people are sitting on the fence. And I say that because if you go ahead and look at Twitter, you go ahead and look at YouTube, I'm sure you guys have looked at hundreds of different videos, and most people kind of give you these vague answers. More or less, you find a lot of clashing opinions, and a lot of people are either incredibly bullish here, or they're very bearish. There's no real in between right now. So we're going to take a look at the chart, we're going to analyze it, we're going to try and answer the question today, and shine a bit of light on the market for you guys. Looking at the data alone, look at the technicals alone and the chart alone. We're not going to be colluding or bringing any information from an outside source. We're not going to be looking at the news, not going to be talking about any of that bullshit. We're just going to be looking at the data. We're just going to be telling you guys what is actually occurring. So if this is something you're interested in, stick around to the end of the video. Remember, like, comment, share, subscribe. Follow us on Twitter, Telegram, VIP channel in the link in the description. If you're interested in daily trade signals, market updates, direct contact to myself, and much more, the VIP channel is for you. That being said, we're going to dive right in. So taking a look at Bitcoin right now, we have told you guys for the last few weeks we are forming a symmetrical triangle. We're not going to go over that too much today, but essentially this is our symmetrical triangle, and we talked about it a lot in the last video. The last video was quite an important one because we were pushing up into this range here. And we said that we were going to see a little bit of a crash, and we saw a little bit of a drop. We saw a 4 or 5% drop here. Nothing too significant. In fact, this whole rally here was caused by quite a large buy-in of Bitcoin. I think someone bought $125 million worth of Bitcoin on market buy. So this big ass green candle you had over here, right next to that drop, was essentially that. And it's kind of pushed the market up. It's given the market a little bit of momentum and kind of turned it around from looking quite bearish to now looking quite optimistic. And a lot of people are now incredibly bullish again. And before we move on, I just want to say, if there's one rule you should be going by when trading, if you're a pathetic noob who just destroys every trade you touch and you feel like you can't win a single trade and you're getting wrecked left, right, and center, the one rule that you need to take away and actually implement into your trading is when you're close to resistance, you shouldn't be buying. When you're close to support, you should be buying. As simple as that. At the moment, we are very close to resistance. This is not the time to be buying. I don't care if FOMO makes you buy. I don't care if there's an amazing Bitcoin update tomorrow. I don't care if the government is putting $100 billion in Bitcoin. It doesn't matter what's happening. If you're at resistance, you do not buy. You wait for that resistance to break, you wait for it to flip, you find support, and then you enter. Vice versa. If you've come down and you've trickled down over here and you're at support, all right, you want to buy. That's where you want to buy. You'll buy and you'll put your stop loss below. All right, and if you come stopped out, you're stopped out. The trend continues downwards. All good. You can look for an entry lower. If it doesn't go down and it continues up from there, well, you just caught the bottom. All right, where do you sell? You sell at the next resistance. Anyway, that's a quick crash course on that. We're not going to go into too much detail, but what I'm trying to say is you don't want to be looking at entering the market now. This is not the time to be entering. Wait for that trend line to break. Now, even if we go through this video and we analyze Bitcoin, and we tell you, well, Bitcoin's looking great. It's looking very bullish. There's a high chance of us breaking upwards. It looks good. We're going to 50K. Even if I say that, it doesn't mean you should buy now. It means you should wait for that resistance to break, wait for the confirmation, then enter a tight stop loss. All right, I'm going to show you a quick example of what I mean and why I mean it. If we take a long position here and we say our target is $48,000, all right, we would be forced to put our stop loss underneath this low, all right, underneath this low over here, which is 40,900. If we're going to go conservative, we put it at about 5%. That's a 5% risk for a 11.5, 9.41 conservative gain, all right. So your risk reward ratio is 1.86. Pretty miserable, all right. Not great. You don't really want to trade on that. You can. I wouldn't be taking that trade personally. At a conservative level, you'd be putting. At an optimal level, you'd be putting your support, your stop loss underneath your support box is 8.92%. At that point, your risk reward ratio has dropped down to nearly 1. All right, pathetic risk reward. You should never take a trade like that. All right. Alternatively, if it breaks over this resistance range and retest, you can put your stop loss underneath this low over here, a 2.3% stop loss, all right, 2.2, 2.3, whatever. All right, and you say you enter around 43,400. And then you got your target, the same 8.5 to 10. Your risk reward is now increased from 1.05 to 3.56 and all you've done is you've waited like a few hours for it to break over. All right, that is the significance of these support and resistance. That is how you become a profitable trader. You're not looking at the immediate situation. You're planning ahead. You're thinking what's going to happen next and how can I capitalize on that next move when it occurs. All right, don't think about the now. Don't think about what you're going to do now. If you get caught up in what you're going to do now trading, you're always going to make mistakes because the market is always moving. All right, you can never predict the exact moment. If you think about and try to predict what's going to happen in the future and then plan accordingly, then when that situation occurs, you have a game plan, you have a strategy, and you'll be able to take advantage of that. And you can use this in both ways. You can use it in bullish, you can use it in bearish scenarios. You can use it to predict short movements and long movements. Anyway, we're going on a massive tangent here, but I've got heaps of information I want to show you guys, and I hope you're enjoying this video so far. If you are, click the like button, let me know down below if you've got any questions about any of that. We're going to get into it a little bit more now. Like I said, Bitcoin's in the symmetrical triangle. What we are looking for, and kind of briefly touched on it already, what we are looking for is a break of this symmetrical triangle, ideally a daily close above. We haven't had a daily close above, and we can see ever since we lost this trend line, well, should I say we formed this trend line, the 6th of December, we haven't actually had a single daily close above this trend line yet. And I feel if we get that daily close above the trend line, not only will we have that trend line, but we'll also have the 100-day moving average, which will be a significant step in the right direction for Bitcoin here to propel it up into this range here. And I would be expecting, like I said in the last video, I will be expecting $47,000 to $48,000 if we can get that daily close above that trend line, guys. So keep an eye on that. Worst case scenario, this 13-hour candle turns red. Worst case scenario, 13-hour candle turns red. We come down, we lose a 100 moving average, and I think if we lose this line here, the support line here, we can see this has acted as support a few times around this range, particularly over here, and particularly over here on this candle here, and even here, we can see that we've found support on that a few times. If we lose that trend line, I think that we will definitely lose that 100 moving average, and we could trickle downwards and possibly retest quite an invisible trend line, but still a trend line nonetheless, which is actually this trend line here. And I think we can come down and retest, sorry, this line's a little bit low. I think we can come down and retest this trend line here before making a movement upwards. And again, this will be a shakeout to shake people out of the market if that occurs, or even a lower level down here before continuing upwards or downwards. I did mention in the last video that we are in a symmetrical triangle, and I've said it a few times today already, but the specific type of symmetrical triangle we are in is a bearish symmetrical triangle. The bearish symmetrical triangle means the price enters from the top side down, a bullish is from the downside up. All right, right now we are seeing a bearish triangle, but in saying that, bearish symmetrical triangles, in fact, I think about a 54% chance of meeting target. All right, 54% chance of meeting target. So there is still a very high chance that we do break upwards from here. In saying that, the odds are against it. We need to be cautious. We need to be aware. I know I didn't want to say anything about the news, but I think Jerome Powell had an interview a few days ago saying that he wasn't opposed to hiking the interest rates 0.5 basis points, so 0.5%. He wasn't opposed to that, and he said that he even may take a more aggressive approach to, stabilizing inflation and bringing inflation down. If that occurs, we can see interest rates reaching, 40-year highs, even higher than that. And of course, that is going to be bad for all financial markets. It is going to be interesting to see how Bitcoin responds. We have had an initial drop down. This initial bearish phase has kind of followed the entire market. We predicted all this way back, but it's followed the global financial markets in the sense that most of the markets have also dropped down in this downwards trajectory. We're getting a lot of sideways action right now. Bond yields are increasing, but a lot of stocks are still pushing sideways right now. And I would be shocked to see Bitcoin, break away from the traditional markets in the next few months. I think it is possible, but I think it's going to be one of those things where it's like it's just too difficult to predict, and there's going to be too many factors at play. It's almost safer to assume, until proven otherwise, that it will follow the course of the other traditional markets, which is obviously if they bleed lower, Bitcoin will also go lower as well. So let's dive into a little bit more of the technicals, and I've given you my targets here, and I've told you what I think is going to happen if we get rid of some of this stuff over here, and we can bring up Was I going to bring up the MA cross? No. Let's bring up the Gaussian channel. So I've talked about the Gaussian channel last time, and I love the Gaussian channel a lot. You guys know how much I love the Gaussian channel, and we can see that the Gaussian channel, we're pushing up into it, and we pushed up into it last time, which was really interesting, which was here. We actually broke above the Gaussian channel, but we got rejected by a trend line. We're seeing the same thing happen here. We're pushing up. We're in the upper half of the Gaussian channel, which is quite indicative of a breakout happening soon. Usually when we push past this halfway point on that Gaussian channel, we usually do get some sort of breakout to the top side. And I told you guys about the Gaussian channel last time, how almost, if you want to look at it, I'm going to say it like this. If you want to look at a Gaussian channel going up, all right, you want to look at a Gaussian channel from here going up, it is exactly the same thing as a Gaussian channel going from here going down. All right, it is in sense an inverted version. When you have this break in, you end up on the downside. When you have this break in, you end up on the top side. It's literally just inverted. And like I said last video, most chart patterns work in similar ways. They are invertible. Chart patterns are invertible, and we see this not only through indicators, but also, structures, head and shoulders, pennants, triangles, wedges, all these other different chart patterns, flags. We see it everywhere, all right? Everything on a chart is invertible. Charts, patterns, indicators, all invertible, all right? So we can assume that we have broken up into this trend. It is similar to the way in which we break down into the trend, meaning that we do eventually expect a price movement above that trend line, above that Gaussian channel upper band. If that happens, we do expect us to push into this range. The question is, when will it happen? We have a lot of support still, a lot of resistance still in this zone. And I do want to point out that, the Gaussian channel is quite reliable in predicting these trends. And we'll actually use the Gaussian channel 2 times. I used it to predict this entire drop here. We called it as soon as we entered. And I used it to predict this entire drop here. We called it as soon as we entered. We actually called it higher up as the RSI divergence, but we did specifically say at that point, the Gaussian channel was quite a strong indicator to us pointing downwards. Moving on from the Gaussian channel, guys, I do want to take a look at that bull market support band. And if you're still around in the video, we're 12 minutes in. About 60% of you guys would have dropped off by now, but it's a longer video, so thanks for staying around, thanks for listening, and I hope everything that we're saying here is making a little bit of sense and bringing a little bit of value. I'm trying to put a little bit more into this video today, because I haven't done a Bitcoin video for a few days, so I hope it's making sense. And let's take a look at the bull market support band on the 3-day chart. It's looking good. It's looking really good. We've had it now our second daily close above the bull market support band, and that was our first daily close, our second daily close, almost getting our third daily close. So according to the bull market support band on that 3-day, we're looking great. But we all know the bull market support band is best suited for that weekly chart. And we are still underneath the Gaussian channel, the bull market support band on that weekly. And little do we know, it does line up with that trend line. So if you want another bit of evidence to suggest that that trend line is where we need to flip, there it is. The bull market support band is indicating that that trend line is a level that we do need to flip, and we do need to flip it soon. Moving off from that, we'll bring up the RSI. And I actually see something on the chart here I do want to mention that I didn't actually notice before, and it almost looks like we're forming, I know it's loosely, but it almost looks like we're forming some sort of W formation on that 7-day chart. We've got that W formation over here. Now that's quite loose. Of course, I would love to see a divergence here. If we saw a divergence here, it'd be a great, great bet on the market continuing upwards from here. If we look at that 3-day chart and we draw our trend line back in, I think actually we need to go over 1-day chart for that. We pointed this one out, I think about 2 weeks ago now, that this trend line was basically, holding pretty well, and we don't want it to hold. We want it to break above if we want to go bullish. And I said a few weeks ago, I think we mentioned it 2 or 3 weeks ago, that this trend line is going to be, determining the Bitcoin price action. The RSI structures are very significant when it comes to overall market movements, more significant than the structures we see in the chart sometimes. A breakout on the RSI structure is usually results in stronger and more aggressive moves than a breakout on market chart patterns, price patterns that we see on the prices. I can't particularly give you any data supporting that, but from what I've experienced in my many years of trading, usually these RSI breakouts result in much stronger and more significant moves, and we can see this happen actually over here. For instance, this breakout occurred after a very long period of consolidation, even though this consolidation started here. And technically it was actually in a downtrend on the RSI. Somehow we were going up. So, you know, these consolidations, although not always do they match the price action on the charts in terms of height, they do match in terms of shape, in terms of height, they do actually pinpoint specific points of breakouts. And there's another reason why we predicted the 21st of July as the bottom. We had that breakout on the RSI, including the divergence. We had a very explosive move upwards, which basically propelled us all the way up over here. And we can see a similar thing happening over here. We've got this strong long resistance on that RSI converging upwards. The question is, are we going to break upwards, or are we going to lose strength and drop down? So I hope today's video was helpful, guys. We already know what to do. Keep an eye on that trend line. Trend line breaks, we turn bullish. All right, we turn bullish. We've been bearish the entire time. All right, we've been bearish the entire time. Been cautious. Our first target was given a 35k. We reached 35k. Since then, we've been optimistic, cautiously optimistic, pushing sideways, taking trades here and there, making profits here and there, not going heavy in the market, not taking more risk than we need to take. You know, most of our, I'll say all of our VIP members, 95% of VIP members have followed this and have not lost a dollar in terms of holding through this drop. All right, our members who have been from the start over here, even further back, these crashes are very predictable. And I know a lot of people on Twitter and YouTube make it seem like these crashes are an anomaly and difficult and hard to predict. These crashes are much easier to predict than upward movements. Drops are always easier to predict than upward movements. It's simple as that. All right, and there's the same scenario here. The drop was easier to predict. So stay safe, guys. If you got any questions, leave them down below. Like, comment, subscribe, follow us Twitter, Telegram, and I'll catch you in the next video.